Good afternoon, everybody. Jumping on here for midday market review. Let everybody kind of file in. We'll go over a few things. Hope everybody's having a great day. All right. Good afternoon, everybody. All the way right back up to 68.50 on SPX. We covered this morning in our, sorry about that, in our pre-market prep video. We talked about our market trend model. This is three pillars: sentiment, structure, and trend. Trend was to the upside. We had our trigger day for our mechanical portfolios, our P-Trans to PGEX portfolios, as well as our wheel strategy. So we're going to be entering positions today mechanically for those portfolios. We talked about living above the railroad tracks, which is our 1 to 3 day kind of our market momentum moving averages. And we wanted to see the bolded white CT or cumulative tick continue to the upside, linear up, which we're seeing. We didn't really see the buying start kicking in until midday after the euro close, 11:30. I say midday, but 11:30ish, and now we're linear up on the tick. So obviously more participants are buying versus selling. Finally seeing the new highs significantly outpace the new lows, so accumulation of stocks. So we were biased to the upside coming into the day via the market trend model, as well as the overall structure that we covered this morning. That structure we covered this morning for 0 DTE here was our drunken sailor range, as well as the confluence of the GEX and DEX transition. We talked about the call dominated pullback to 6,800, 6,805, or even down towards the bottom of drunken sailor range. We'd look for that to hold and then provide a long opportunity to the upside. We had low exposure within our drunken sailor range. So we're going to be driven by the intraday call versus put speculation. So we'll cover our vol M command here in just a minute. And now we're back up to 68.50, which is the PGEX area where we talked about it might be difficult to get over via net stack command, as well as charm and some other factors. So we'll look at our intraday vol M command. I'll go ahead and pull just the latest one from our automated channel in our Discord. So this is what we look at intraday. Let me grab the interactive one. Sorry about that. Okay, so you should be seeing the interactive vol M command. If you're not, post in the chat there and let me know. But the quick takeaway is this is the bolded green line versus the red line. The bolded green line is the call centroid. This is where we take all the mass of transactions on the call side and we plot a center level. Obviously, it's the mass of market participants where they're transacting. And this morning, we really saw it just kind of come down and flatten, but the slopes were turning back positive to the upside. Linear fit line was positive to the upside. Then we saw a significant amount of calls come in. We'll look at that here in just a second. And then the put centroid was just trending higher all day. So market participants were not transacting out of the money puts to the downside. And then conversely, came right into our COTMP level, where historically that is an opportunity for a bounce in a call-dominated structure, call-dominated positive gamma environment. This is where out of the money puts become in the money, and we continue to see these levels hold. Obviously, that matched 6,800-ish, and then the bottom of our transition areas also where we're watching. And then now we're all the way back up to 68.50. The other tool I like to watch intraday is our volume chart via this command right here. I'll go ahead and pull it up. So again, this is watching the transactions of calls versus puts. You can just see the calls just significantly outpacing the puts. You see the volume traded here on the strikes, and then our spot price over here. So just 900 contracts here, 700 contracts here, 700 contracts here, and then you see the put volume here down at 600 versus 900. 487 versus 700. So just the calls significantly outpacing the puts. And obviously, when that is happening, the out of the money speculation is occurring, it's going to lead to positive price appreciation and move to the upside. So that's how we use our two kind of tools, our intraday volume tools, as well as our volume command and our market trend model. Give me just 1 second, and I'll be back with a All right, so continuing on, obviously looking at our volume command and what's happening with the market trend model as well as price. So we'll look at the 6850 level. That was what that higher sensitivity level this morning that we talked about. We are now call dominated across the board via our net stack command. You'll notice this morning that we were in the money calls below us, but out of the money puts above us. Now we're completely call dominated across the board in the net delta. So that's a positive bullish development. Very small right-hand plane integral for out of the money calls. So these are really not going to be a headwind. If we do see some out of the money speculation come in, we should be able to drive through that. Now you notice the net charm, right-hand plane slightly larger than the left-hand plane, and we're sitting at 68.75. So those would be the headwind now at 68.75. So if we get above 68.50, 68.60 would be next, and then 68.75. You see gamma command at 68.50. So if we get across that level without the money call speculation, we'll be adding deltas fairly rapidly versus the downside here in the left-hand plane. And then Vanna, obviously fairly balanced. So we're not anticipating that to be a significant tailwind for our move up now towards 68.75 if we cross 68.50. So we'll watch those as we head into today. Individual equities appreciating nicely. We covered a few of those this morning, as well as on X. So Apple, NVIDIA, PLTR, many of those are appreciating nicely. So our thought process or thesis would be now, if we get across 68.50, we'd be looking for 68.60 and then 68.75 to the upside. We'll continue to watch our vol-m command, which is our intraday volume analysis I spoke about, to see if we continue to see the speculation to the upside. So here is the latest chart. So at the least, and now we're starting to see the call centroid flatten out just a little bit. So at the least, we would be looking for a close between these two linear fit lines. Again, as long as we continue on this trajectory of market participants and speculation, we close somewhere between 68.36 and 68.57. We probably post a dot somewhere around in the middle, depending on what is going to happen into the end of the day with the speculation. You see, it was kind of dropping a little bit here. So out of the money speculation starting to wane and degrade just a little bit. So 68.50 may be that cap on price that we'll continue to watch. We may just grind around the 68.50 for the afternoon. We're already into 2 o'clock, so a few hours left into the afternoon. So if anybody has any individual equities they want to look at, I can pull those up. We can look at the positioning of those and where they're at within the overall structure. But just a nice trend day back to the upside. Market trend model, everything bullish, firing to the upside. So we're just going to increase our progressive exposure. And then again, if we get above 68.50, we like to see this confluence of levels. I talked about this morning on 0 DTE. That we had that confluence of, the GEX and DEX transition. This always gives us greater confidence in a call-dominated positive gamma environment that pullbacks will continue to be bought. And then the market trend model was indicating that market participants were in a position to buy the dip this morning. That really didn't see our trend roll over. So again, supportive type action as long as the structure is remaining like this. And you can go back and compare that to our pre-market prep for multiple days this past week, where we're actually put dominated, and we had out of the money puts above us, in the money puts above us, out of the money puts below us. Speculation wise, we were in a negative gamma environment. Dealer hedging metrics were accentuating price moves to the downside and to the upside, but it was much more difficult to move to the upside because of the significant amount of in-the-money puts overhead. In our net stack command, we were looking at those that the charm was much larger overhead as well as the in-the-money puts compared to the calls below us. So those were just continue to grow throughout the day, and those were the headwind trying to move to the upside. And we were not seeing that out of the money call speculation from market participants. And that flipped this morning via kind of our delta balance tool here. Again, this is indicating left-hand plane and right-hand plane above and below spot price. Our left-hand plane, which is the red dotted line, was in the money call dominated. And then our right-hand plane was finally getting back above zero, indicating out of the money call speculation was starting to come in. And then our GEX ratio was also rising. This is short dated call gamma versus short dated put gamma. So short dated call gamma was significantly going in the complex also. So again, all of those are tailwinds to a bullish development on the market trend model, and it just continues to push us up to the upside while we're continuing to be supportive. So we'll look for stalling at 68.50 into the afternoon. That was kind of our thesis, to drive all the way back up to 68.50, and then we'd kind of reassess and see how market participants were positioning and transacting. So we could see some choppiness and stalling here really for the rest of the afternoon, depending on what the speculation will look like via our intraday call versus put analysis. So again, if we see a significant amount of out of the money calls come in, then we definitely could drive to the upside. Here is our intraday minute chart with those gamma levels overlaid. Delta levels via our web app. You can look at those also, but again, high sensitivity levels, we're pushing right up to that area right now. And if we get above that, obviously the next area above would be all of our charts here. Gamma Edge are interactive, so you can just zoom in and then you can look at the strikes here. So the next area there would be 68.60, which I discussed. And then above that, we'd be looking for a 68.70, 75 area, but we're just kind of stuck right there. You see 29 million at that 68.50 bar right there. So we could just chop around that 68.50 bar. And those alerts you keep getting those are buying alerts via our tick, our market trend model. So tick is just significantly to the upside, continue to see buying pressure to the upside for the overall market. So. All right, let me know if anybody has any questions. I'll hang out for a few minutes. Everybody, thanks for joining us this morning. Again, like and subscribe on X and YouTube. You'll be notified when we go live with our content, as well as our post-market review, how we navigated the day via our tools, and then our pre-market prep. And then if you want to come join us at gameedge.us. You can jump in here, put your email into the newsletter. You'll be sent that on the weekends. And then you can come look at our free courses, GameEdge FastPass, sign up for that, all free education. And then just see how we use our tools and how we use them to profit intraday and navigate the SPX option structure. So, all right. Thanks everybody for joining us. Anybody want to go over any individual equities, talk about any of the tools or what we're looking at this morning? I think hopefully I laid it out pretty good with our pre-market prep that we were looking for supportive type action towards the levels to the downside, key levels that we're looking looking for those to hold, and hopefully buyers to step in. So we'll continue to watch these throughout the day. There's our SPY chart also, held the zero GEX level extremely well and then started moving back to the upside. Again, that's usually a balance point, at least that we like to watch. Qs held the COTMP and now trying to cross above zero GEX there. And IWM held above COTMP, crossed above zero GEX, and now trying to push up to the P-trans level. So again, just strong action across the board. And then if we do get through the 68.50, we could see a pretty quick push up towards 68.60 and then 68.75 would be those areas. So. All right, so just watching this chop around 68.50 there. As we just talked about, we're going to need significant out of the money speculation above 68.50. Key takeaway is on the on our volume command here, we're starting to see the centroids flatten out just a little bit, and you see we tested 68.50 again. We would need to see this green centroid just continue to progress higher. That'd be indicating out of the money calls. The massive market participants are speculating with out of the money calls above 68.50. So you see the kind of strike here, 66, 63, and then we drop back down, and now we're just right at the 60 level. And we know market participants speculate with out of the money. So 50 delta line, this is usually the 50 delta line. So they buy it, just making an assumption, buy at 20 delta, sell at 50 delta. So this is probably the 20 to 50 delta line here, where the out of the money speculation is. So we'll just continue to watch that. But if this continues to chop around the 68.60 and flatten out, then spot price will follow. Spot price does not go where market participants are not transacting options. So with that said, if we just continue the centroid to chop around, massive market participants chop around between the 50 and 60 level, then spot price obviously will not move a lot higher. So it's basically what I'm looking at there with the volume command. So. So centroid lines, those are transactions. This is volume. We take the mass of the transactions of volume, actual transactions of options contracts, and we plot a center line. So that gives you the center point of where the mass of transactions. There could be some on either side, but that's basically the center point. And that gives us an overall trend is basically how those are plotted. Hopefully that makes sense, PV. Let me know if that doesn't, but yeah. And then that matches P2P. I did P trans to PX trades. Mechanical strategy, enter those. I can show you guys and gals. Sorry. P2P management for today. Entered AMD and Lilly for P2P. So, and there's our portfolio. And there's our link to our portfolio also. So, yep, AMD and LLY on P-Trans to PX. I didn't have anything to close today. So this is our first trigger day for TC4 Plus. And then our wheel strategy. We had candidates for a wheel strategy. I'd have to pull those up. I'm not sure exactly what can you show on the chart. AMD and Lilly. Is that what you want to look at? AMD and Lilly? Yeah. Yep. Let me find a full chart. Tesla. I'll just take this one right here. How's that? So there's AMD. Probably haven't updated the script yet. So at the open 241.66, so fairly flat today. And then Lilly up significantly, so that's good. I haven't updated. Oh, we're hitting COI there. I need to update the script and see if COI has actually moved up to error plus GEX. I haven't updated the script since this morning. So LLY there moving up nicely. I think some people have been in LLY significantly lower without the TC3. Logic is mechanical. They're moving across P-trans, so in a more positive gamma. Call dominated structure, and the call speculation is to the upside. So when you cross transition level, that's our trigger to enter the trades when they close above P-trans, given that the market trend model is on. And then those are the triggers to move to the upside. Targets a close above plus GEX. In plus GEX most likely will move up if we update the script here. I'd have to look at the updated script. And we run those at the end of the day. All of our P-trans to PX trades are not intraday. They're market on open, and then we run the script at night, and then we do market on close. We run the script at night. It tells us which stocks to exit, and then we'll place an order for the next morning if there's any exits for the portfolio. So absolutely. So yeah, thanks, Tom. Appreciate it. PV, back to your question. But is it for all day, or what's the time window? Yes, all day. Correct. Yeah, we're plotting the mass of transactions. So if we continue to plot the transactions and the volume. So if the volume continues to transact higher, and so the mass of the center point of those transactions. So obviously, if you have transactions below spot price, transactions above spot price, and here's your center point. If the mass or volume of transactions is higher, then that's going to move your center point higher. If it's lower, that's going to move your center point lower. Or if it's balanced, it will be flat, right? So if this was if there was balanced on both sides between the center point, then this would be a flat centroid. If it is if the center point is here and the balance is to the downside, that would be a negative call centroid. And then if this is your center point and the balance, the volume is much higher on above the center point, then that's going to continue to drive the center point higher. Same thing with the puts. So as you see with the puts, obviously they keep transacting higher strikes, and that's moving that higher, right? And all these are for the puts is just opportunistic under spot price. And this is actually supportive with both the call and put centroids moving higher, right? So on negative days, you've seen our trend down days, the put centroid is in a steep negative slope to the downside. So here's the center point. Think about puts transacting out of the money puts, the volume to the downside is much larger. So that moves your center point to the downside, right? So hopefully that helps. Is that a good explanation? I'm trying to do it visually and talk through it. So I just want to make sure that makes sense. So. Yeah, absolutely. Yeah. And that's what you want to do is you're wanting to see what market participants are actually doing, right? Where they're actually transacting, so that, and the volume that they're transacting is key. That's why I showed that previous chart. You can see the volume, right? This is calls versus the red, which is puts. So the calls are just significantly outpacing the puts on the volume. And that's what this is showing you. This is volume traded per time frame here and per transaction. So the calls is just blowing away the puts. And that's obviously what you want to see if the market continues higher. So at each time you've seen a transaction across the board here, the calls are just significantly outweighing the puts. Now, it doesn't always look like this. Many times the calls versus puts will be matched and you'll get a kind of flat to slight grinding market. And then you see a couple spikes, but today the calls are just significantly outpacing the puts. So yeah, hope that helps. Yeah, so I'd anticipate us to just chop around 50 into the afternoon unless we get a swift up spike in calls that blows or that squeezes up towards 60. So that would be my thought process there. So. All right. Thanks everybody for joining us. Everybody have a great afternoon. We'll see you later.